Basic investing terms and concepts. Welcome to our lesson on basic investing terms and concepts. Before we start discussing different types of investments and strategies, it's important to have a solid understanding of the language used in the investing world. First, let's talk about the stock market. The stock market is a place where publicly traded companies' stocks are bought and sold. When you buy a stock, you become a shareholder of that company and own a small piece of it. The value of your stock will fluctuate based on the performance of the company and the overall market conditions. Next, let's talk about bonds. Bonds are a type of debt investment where an investor loans money to an entity, such as a corporation or government, in exchange for interest payments and the return of the principal at maturity. Another important concept is diversification. Diversification means spreading your investments across different types of assets, such as stocks, bonds, and real estate, to minimize risk. This is important because if you have all your money invested in one stock, for example, and that stock tanks, you'll lose a lot of money. But if you have your money spread out across multiple stocks and other types of investments, you'll be less affected if one stock doesn't perform well. Risk and return are also key concepts in investing. Risk refers to the possibility of losing money, while return refers to the potential for making money. Generally, investments with higher potential returns come with higher risk. It's important to understand this relationship and choose investments that align with your risk tolerance. Another important concept is asset allocation. Asset allocation is the process of dividing an investment portfolio among different asset categories, such as stocks, bonds, and cash. The purpose of asset allocation is to manage risk and increase returns by spreading investments across different types of assets that have different levels of risk and return. Lastly, it's important to understand the concept of compounding. Compounding is the process of earning interest on interest. It's one of the most powerful tools in investing, as it can help your money grow at an exponential rate over time. These are just a few of the basic investing terms and concepts you'll come across as you start your investing journey. As we continue this course, we'll dive deeper into each of these concepts and explore how to use them to achieve your investment goals. As always, if you have any questions, feel free to ask. Let's move on to the next lesson.